In fact, on that note, let's welcome in our guest joining us on the show, Vineeta Sharma, Head of Research at Narnolia Financial Advisors, joining in. Good to have you on, Vineeta. You know, there's a certain theme that's been playing out this week. After we reclaimed that 11,000 mark, we've been steadily trending lower at the benchmark level, and largely this is because the kind of absence of large cap participation that we had been seeing. Today, for example, the top contributors to the drag that we saw at the index level, names like Reliance, the HDFC Twins, Infosys, TCS, Kotak Mahindra Bank, all the likely names that had actually been holding the benchmarks up so far are giving up slightly, and that's really why we're trending lower. We've given up some key supports, but on a fundamental side of things, what is the sense that you have for market direction going forward?
So, Nivrita, all the companies' results for Nifty have come. So, except for ONGC, which we'll see in a short frame of time. So, if we look at the Nifty earnings for this quarter, the top line has grown by 24%, and that's not a small figure. Looking at the bottom line, the profit after tax has grown only by 0.87%, and the EBITDA growth has been around 7.5%. Now, the kind of top line growth we have witnessed for the Nifty companies, it is not being translated into the EBITDA margins or even for the net profit. One, because of the cyclical, the raw material prices and stuff going on. And second, there have been a lot of one-offs in this quarter. Say, for instance, Tata Motors, or even for the banks, the profits have not come in. The pre-provisioning profits have come, but that's a place where most of the lever for the earning growth had been, and that is not translated into the net profits. Now, I presume once the top line support is there with any companies or the Nifty, sooner or later this should translate into the profit growth, and accordingly the market should revive from here on. But then definitely it will be some time, because there are uncertainties, domestic uncertainty, also global uncertainty, and so that should take a quarter or so, where all these things may take some time to pan out.
All right, clearly some concerns on the earnings front, and that's what seems to have dragged the market lower. We'll of course have to wait a quarter or two, especially for sectors like autos, for example, where a lot more clarity is needed going forward from here. But let's talk about the stock-specific action of the day, Vineeta, and we have to start with a Yes Bank. Very clearly the stock of the day. It was a 30+% rally that we saw coming in today's trading day, and this of course on the back of the RBI's risk-based assessment report that came in for Yes Bank, which observed that there were no divergences in the bank's asset classification and provisioning. So that's a clearly good news coming in. Brokerages too have given a big thumbs up to the counter, and we've seen a stellar rally play out for a Yes Bank. Let's bring in Abhishek Ranjan then with what brokerages have been saying about Yes Bank. Abhishek?
Well, yes, a clear positive, and that is clearly being exhibited in the way the stock has been reacting to this news development. And as far as brokerages are concerned, and to begin with, what SBI Cap Securities has to say on this development, well, they have a buy rating on the stock, and target price that they're putting out for Yes Bank is 315 rupees. And among the key pointers that to highlight from the report is the fact that there's a massive gap up ahead is what SBI Cap Securities is highlighting. They call it a massive confidence booster. Nil divergence is a material positive development. So these are the key phrases that one can pick up from what SBI Cap has to say on Yes Bank. In fact, they go ahead and say that this was the biggest reason for RBI insisting on change of leadership and asset quality divergence. Now that being addressed, they are one step closer to regaining regulatory credibility and confidence, and they reiterate the fact that key uncertainties now stand addressed as far as Yes Bank is concerned. Moving on, if you look at what JM Financial has to say on Yes Bank, well, they have upgraded Yes Bank to buy with a target price of rupees 275, and among the key elements that they have, that one can pick up from their note on Yes Bank on back of this development, well, they're saying that two key concerns for bank addressed over past month: advise investors to buy even on sharply positive reaction on the stock, and regulators communique significantly addresses the asset quality concerns is the point that they're making. In fact, they expect clarity on strategic direction from new leadership, and that is something that they're looking forward to. And lastly, if you look at what MOSL has to say on Yes Bank, they maintain a buy with a target price of rupees 270, and even they reiterate. So that has been the crux of it. So all of the brokerages, at least that we are picking up, are saying that key overhang has been addressed. Worst appears to be behind. Expect Yes to now look at other key issues facing the bank, and the other key issues that they have pointed out is the management is now look to focus on attrition on top management and capital raise. In fact, nil divergence, they're saying, will reinforce investor faith and enable smooth capital raise going forward as far as Yes Bank is concerned.
All right, Abhishek, thanks very much for taking us through that. Vineeta, we can't ignore the kind of reaction that we saw coming in on Yes Bank today. I think no divergences, perhaps that's not something that the market was anticipating, considering this was one of the private banks that was reporting the largest divergences. It even resulted in a management change directive coming in from the Reserve Bank of India. So definitely good news taken on the back of the fact that we, of course, have the new management announcement made also. What would be your view on Yes Bank? How materially does it change after this report?
So definitely there were 2-3 reasons why Yes Bank was under review from our side. One is definitely the divergence report that we've been waiting for, and that has come in on a positive note. Second was the capital raising plan. So once we get the clarity from the divergence side, we have the important point would be how Yes Bank will be able to raise the capital. Because underlying, if we look at Yes Bank, the underlying asset growth is around 41%, and even the net interest income that had grown by 41% for this quarter. So all in all, the results were not that bad for Yes Bank. Considering the NPA, what is for regarding ILFS, which Yes Bank has around 2,500 or so kind of exposure on ILFS, and that also around 1,900 or 1,900, which is the NPA, they have done some specific provisioning of 25%. So I think things appear much better from now on. If we look at the valuations, it is 1.4 times FY20 price to book. So definitely it now Yes Bank may be looked upon at least, and then it's too early for me right now to comment whether to go and straight away buy this stock, because important management change is there and capital raising plan is another. These are the two trackables I'm still waiting to get a clarity on.
All right, so not getting carried away then with the kind of frenzied buying that we saw coming in on a Yes Bank. There's still some areas of uncertainty, so maintain a cautious view on Yes Bank, but largely we can't rule out the fact that this is a big positive coming in for the bank. Now, we also got in Ashok Leyland numbers, and the street clearly cheering the counter after the quarter numbers that we saw. Low effective tax rate clearly aiding them in the quarter gone by. The stock surged over 6% after the results were announced. The management also expects gains to come in from pre-buying of BS6, and that should kick in the coming quarters as well. Of course, the company is also banking on greater defense orders, which will come from tenders that have been won over the last few years. Just to go through some of the numbers, we were expecting a very weak quarter, but in spite of that, the stock has been running up. And when we got, most of the numbers, they beat most of the estimates that we had. Revenue came in lower by about 12%. The net profit figure came in down 21.4%, but we were expecting a drop of about 38%. So that's really putting it in perspective as far as the numbers that we saw. Margins contracted, but not as much that we had as we had anticipated. So double-digit margins is what they've managed, 10.3% versus an 11.5% figure. Vineeta, what did you make of the numbers coming in from Ashok Leyland? I think in a very challenging business environment, they managed to beat estimates. Is that positive as far as you're concerned?
Yeah, Nivrita, because the management, the margin improvement is one thing which the entire automobile sector is right now struggling with. If you look at this results overall for automobile, the top line has grown by 11% and the EBITDA that has degrown by 8%. Net profit has gone down even more. So considering all this base, when Ashok Leyland comes out with a result with the double-digit margin growth, it certainly is a positive. But yeah, two concerns. One is because the product mix is going to be more of LCVs going forward because of the Excel norm change. So that I'm a little apprehensive about how this margin will be sustainable going forward, because once or twice, you can get into volume growth or pre-buying because of B6, but the volume growth has to be structural. This is one time we can push on a BS6 norm or something, but then the underlying volume growth has to come in from the sector. LCV growth definitely will cost the company into the margin front. If the company is able to modify, or in fact able to contain on the raw material costs, maybe, but I'm not very sure on the sustainability of the margins for Ashok Leyland.
All right, so worried about how, Ashok Leyland will manage to sustain these kind of margins, but definitely it's a big thumbs up as far as the street is concerned after those numbers came out. We'll, of course, see how the market takes the news once we settle tomorrow, because the numbers actually came out very close to the market close as well. But the big sectoral gainers of the day were clearly from the media pack. The Nifty media index, in fact, closing out the top gainer, and this after significant kind of pressure that we've been seeing coming in several of these stocks. So let's talk about some of the big gainers then. Z Entertainment, one of the top gainers as far as the Nifty goes as well. Sun TV seeing a good recovery from the recent cuts that have played out for this one as well. We saw good, traction coming in for names like Inox Leisure. Eros Media closed out with gains of about 2.5%. PVR as well as a UFO. All these counters seeing very strong traction as far as today's trading day is concerned. But that said, Vineeta, many of these counters, there is a fair amount of concern. Z Entertainment has its own share of concern. Sun TV, we had results coming out. Would you be betting on media at this point?
So media, right now what we are liking is a company which has good content. And those companies which are into, say for Saregama, who have a good content base, should go perform very well. But media as such in India right now, the companies that we have, they are very diverse. So we had Zeal was looking good, but then it has its own problem. Sun TV at this current market price, I would say, considering the low valuations, it has been trading for more than 6-year low valuations in all parameters. The kind of growth that has come for Sun TV is encouraging. The ad revenues are growing by more than 20%. Subscription revenues have grown up well. Then the Sun Next that they are planning, there is fair amount of positivity in Sun Next also. Also, that will come with some kind of investments that the company will make, because the company has said that they will have a new, whole team for that particular thing. So that might cost something on the margin front for Sun TV. But overall, if we look at the top line, I think that should play out, because also in Tamil Nadu, digitalization will be completed by June 19. So all these, I think, form a base for Sun TV, considering the valuation it is right now trading at.
All right, so that's a fairly detailed look at some of these media counters that have very much been in focus. We've seen volatile moves come in, but today, very strong up move coming in for most of them. 4.5% up is where we closed out on a Sun TV. We'll take a quick break on that note, but as we take the break, let's put the focus on NBCC, because this counter came under severe pressure in trade today. We saw a 5% cut coming in trade on the back of a fairly mixed set of third quarter numbers that came in. We caught up with Anup Kumar Mittal, Chairman and Managing Director at the company, who really gave us an outlook for the company's order book as well as the kind of execution that they're expecting going forward. Listen into what he had to say as we take a quick break.
Today our order book is about 85,000 crore rupees, and the number of projects in 85,000 crore rupees is not many. I mean, this number is about 100 projects. In last 9 months in this financial year, we have received around 9,000 to 10,000 crore rupees orders, and there are projects approximately 10,000 crore rupees which are almost ready to sign with the different departments. I hope that some of these projects will be signed before 31st March. Our maximum profit or business will come from the redevelopment and project management consultancy business.
Welcome back. You are watching Tomorrow's Bets right here on Business Television India. Steel stocks were in focus through the course of the day, and this as pellet prices jump over 20% in the fourth quarter of fiscal 19 so far. Meanwhile, long reinforcing steel prices are back to the fourth quarter opening levels and have increased by about 5% if we talk about the month of February. So names like JSW Steel, Sarda Energy as well as JSPL along with Tata Steel definitely were stocks that were in focus through the course of the day. And in fact, JSW Steel, one of the top gainers on the Nifty, closing out with gains of about 3.5%. Vineeta, metals have been very beaten down, in particular steel counters like the ones that I just mentioned. But we are starting to see a bit of traction. I think any sort of news on the pricing front would definitely go a long way to improve the fourth quarter expectations that we have. Where do you come in on these steel makers?
So overall, on the metal space, we don't have a very clear view for investment purposes. We are liking only JSW Steel in that regard. And because I think metals can be, it is a trading bet. You have to be, if you're a retail investor, you have to be very vigilant of how the prices are moving, which becomes a little difficult for any retail investor to take that kind of a stand. Regarding JSW, definitely if you look at the margins, the company has taken a lot of initiatives on the cost efficiency front, and even on the realization they have pre-booked some orders, then that deprives them of the volatility that happens in the market. So the top line also on the volume front, we are not seeing too much of a growth. Depends on the how the realizations pan out. So overall, according to the valuation and the kind of sustainability or consistency, the profits are there in JSW. That's the only pick I would recommend for long-term investment. Rest, we have a neutral view on how the metals will pan out. Because a lot of, Nivrita, there are a lot of uncertainties on the global, and steel is one stock which is a little deprived of the global uncertainties, thankfully. But then it totally is a trading bet sort of for me.
All right, it's a neutral view as far as metals go. You have to be very nimble-footed and look at it more as a trading idea. But as for retail investors, JSW Steel remains the only exception that Vineeta likes as far as the fundamental long-term story is concerned. So that's as far as the steel counters go. But let's talk about cement prices, because we've seen cement stocks reacting fairly, strongly to this news. Cement prices have been raised by about 10 rupees per bag in North India this week, and the price hike includes a 3 rupee per bag rollback of a dealer discount. Now, cement prices are hovering around 310 to 315 rupees per bag at the moment as far as the North Indian market is concerned. Keep in mind that cement companies had actually hiked prices by between 7 rupees to 10 rupees per bag last month, but then we saw that hike actually rolled back partially. So this is a price hike that's coming on the back of those developments last month as well. So at the moment, cement prices are up about 30 to 60 rupees per bag if we talk about South India as well as West India over the last month or so. Of course, on the back of the expectations that we have on the GST Council meeting, the recommendations that they will take up from the group of ministers as far as real estate is concerned, cement prices have been soaring ahead of those kind of expectations. Any kind of an announcement coming in from the GST Council on real estate will be very material for these companies. GST relief for small and affordable houses are expected ahead of those general elections as well. So there's a fair amount of news going on, Vineeta, as far as cement goes. Many of these, have fallen to the lows for the year. But that said, we did see positive traction in today's trading day. Names like Ultratech Cement, Ambuja Cement, Shree Cement, India Cement saw a very strong move, in fact closing up with gains of about 3%. JK Cement, Star Cement, one of the smaller names that actually saw a smart up move just before we closed out as well. What's the view on cement? I know that there's a lot of politics perhaps that goes into this ahead of the elections. We also have the GST Council meeting. Put this together for us. What would you be doing with these names?
So we are liking cement sector from this quarter, how the results have panned out. If you look at the volumes have come out pretty decent for these companies. And I think for most of the companies, it was little above than what we were expecting. Definitely on the margins, Ultratech was a little miss in that sense. But then coming to Ultratech, we see there are a lot of synergies that have to play on. There are a lot of mergers, and that would definitely take some time. looking at how the prices in north have been going up, even in the this quarter, management also said that this will be a little trend going forward. So I think there are a couple of names in the cement sector which one can start accumulating at this level. We also like ACC and Ultratech. These are the two names that we are liking. ACC because it is trading at a very good discount to its, and the kind of capex the company is planning, some 3,000 crore of capex going forward, and the volume growth should come in going forward. This time around also result have been pretty decent. And the Ultratech, definitely margins are under pressure, but then that should revive once the whole merger and things become smoothened from here. So one can start accumulating certain positions in cement, or even for any kind of building materials. We're liking Kajaria also, Kajaria ceramics also may be accumulated at these level, owing to the kind of volume growth that is coming in. Because cost side there are pressure, and if the volume growth comes in, some kind of relief will be there on the margins also.
All right, so that's a positive outlook coming in for the cement space. And Kajaria Ceramics, in fact, another one from a related industry that could be on your radar going forward from here. Just a final stock, Vineeta, that I want to get your take on. We saw a very strong recovery coming in select financial names today. And the one I want to ask you about is the Divan Housing Finance, because we saw a bit of pressure for that, quite a bit of pressure for that stock on the back of the resignation of CEO Harshil Mehta. But we saw a very strong comeback. In fact, we were up near about day's high. It's a 15% surge that we closed with. What is the view with a DHFL at the moment?
At this moment, see, Nivrita, DHFL is undergoing lot of volatility because of some or the other news that is panning out, and so it is always to be out of these kind of stocks, because it's difficult to have a fundamental view once the CEO resigning. Then we come to know of some other development that he'll be there in the company, but he's going to take a different role. Then also on the exposures the company has. So there are a lot of other things other than fundamentals. So right now it's not very prudent to talk on fundamentals, how DHFL is doing. And regarding how the events pan out, this company will surely be volatile. So I would recommend to stay away from this kind of a company, as in till the things clear out, or I think it's better to stay away. There are a lot of other better companies which one can look at.
All right, clear advice, point taken. Better to stay away from companies like this. There's a fair amount of uncertainty. Other stocks looking much better, in fact, as far as Vineeta is concerned. Vineeta, we'll leave it at that. Thanks so much for joining in. Appreciate your perspective on the markets. That's the view coming in from Vineeta Sharma, Head of Research at Narnolia Financial Advisors. But with that, it's a wrap on this edition of Tomorrow's Bets. News and updates continue on the other side. Stay tuned.